This communication was prepared for educational purposes only and should not be construed as investment advice. All opinions or views reflect the judgment of the authors as of the broadcast date and are subject to change without notice. Julius Wealth Advisors, LLC, is a registered investment advisor. Our disclosure brochure, available at advisorinfo.sec.gov or through contacting us, provides further detail about our business, services, and fees.
Welcome to episode 17 of The Big Bo Show. On this show, we're going to talk about some essential knowledge for long-term investment success. We're going to first talk about ways not to lose. We're going to then talk about ways to win. And we're going to wrap it up and relate all of this to the current Miami Heat run to the Eastern Conference Finals as an 8th seed. So sit back, relax, and enjoy episode 17 of The Big Bo Show.
By Julius Wealth Advisors.
So, you want to be a successful investor? Well, me too. This was my goal and has been my goal since the age of 10. If you followed along on the Big Bo Show, you have known that I bought my first investments from my grandfather at the age of 10. 5 shares of Goodyear Tire, 5 shares of Pepsi, and this catapulted me on my personal finance and investment journey. Through that journey, it has taken me to make many investments through the dot-com phases of the early 90s, through working on Wall Street for many years for many top firms, getting the opportunity to meet and talk one-on-one with some of the brightest minds in this industry, studying to get some top designations, managing billions of dollars at some top firms. I will tell you, being a successful investor, it's difficult. It's very difficult. It's time consuming. It's also very rewarding. So what I thought I'd want to do in this episode is go through some of the lessons and essential knowledge that I've gained through the past 30 plus years of studying investing since the age of 10 and pass these tools on to others. And the first thing I'm going to do is go into common mistakes that we make. And why am I going to talk about the mistakes first? Because there's a saying in sports that offense wins games, yet defense wins championships. As I talked about in prior podcasts on the episode KISS, a lot of times winning is about not losing. And the first way to look to win is by stop beating yourself. So let's go through some of the top mistakes I often see people make and some mistakes I've made myself. So the first mistake that I see is bad behavior. And bad behavior comes from emotional investing. And we've talked about this plenty of times. Human beings are emotional. A lot of times we make decisions based on emotions and not the numbers. You can see this in FOMO investing over the past, I would say 3 to 5 years, past 3 years definitely. You've seen this all throughout time, whether it be all the way back to the tulip bulb craze, the dot-com, the housing crash. You see emotional investing take place all the time and people following the crowd. So the first thing you need to do if you want to stop losing and have mindset of that defense wins championships, the first thing we need to understand is that as human beings, our emotions cause us to have bad behavior, and this bad behavior is going to work against us. The second mistake I often see people make is a lack of time. You see, time, no matter how rich or poor or smart or dumb or whatever you are, time is the great equalizer. We all only have 24 hours in a day to do what we want to do to make ourselves a better person. And when I think about time, I think about a book that I read multiple times. The first time was about 3 to 4 years ago. A book called Extreme Ownership by Jocko Willink. It's Extreme Ownership, How U.S. Navy SEALs Lead and Win. And one of the biggest takeaways, if not the biggest takeaway that I personally had when I read this book, was the chapter on prioritize and execute. This chapter talked a lot about how, as leaders or as humans, we try to take on way too much. And when we take on so much, we end up losing at everything versus prioritizing what's the most important thing and then putting all of our effort and all of our energy into that one task or that one goal and then moving on to the next. Prioritize what's important. You might have 10 things you want to accomplish. Prioritize what's important and then execute on one at a time. But here's the conundrum. Unless you're doing this full time, unless you're investing full time, you have a lot of priorities in your life. You have a family, you have your job, you have friends, you have yourself. Then you also have your finances. But many of us try to accomplish all of these and be great at all of these all at once, and we end up sacrificing, and many times, and what the numbers of this country show us, we sacrifice our finances. And all of these things are important. Your family, your job, your friends, yourself, your finances. All of these things are important. Yet, you will most likely sacrifice one or all if you don't get yourself some help and then prioritize and execute. And I can talk from experience on the investment side. When I was working at a major firm, helping to manage a small cap fund, it was a 24-hour-a-day job. At the time, I also had 2 young kids. I have a family. I have myself to try to take care of and going to the gym and staying healthy. And a lot of that can lead to burnout, over fatigue, or one of those things lacking in your life. So what do you got to do? You got to go ahead and you got to ask for help. Whenever you have different things and you want to prioritize and execute, there's a way you can outsource to get the help. Now, I see this all the time. I think it's interesting, to say the least, to put it nicely, where a lot of times I see people have help at their home. They have a nanny to help with their kids or to help with the family side, and they pay for a nanny. Okay, well, you're outsourcing that. You're getting some help. You're spending a fair amount of money on that. You take vacations. Well, that's, again, prioritizing your family, prioritizing yourself. You spend money to go to places for work, to travel for work, to go to conferences. Okay, you're prioritizing your work, your job. But the funny thing is that many people are reluctant to outsource and get some help on their finances. And again, the numbers of this country show it. The numbers that I talk about all the time about how the percentage of millionaires in real terms hasn't increased in this country for over 20 years. So we go ahead and we outsource and we spend money on nannies, on vacations, on going to conferences for work. But we do not, and we're reluctant to outsource help on our investments and our finances. Think about that for a little bit. So again, common mistake that I always see people have is a lack of time. Are you going to prioritize and execute? Put all of your efforts towards one object, prioritize and execute, move on to the next. Sometimes this means you need to potentially outsource and get some help. The third mistake I see people make is not having a plan. As Benjamin Franklin once said, if you fail to plan, you are planning to fail. And what I mean by that is a lot of times, and what I saw when I was on Wall Street, is that people push investments. They push investments. Oh, I got the best investment for you, right? Like, come on. We're working with people's lives here. We're not trying to sell them a quick fix. These are people's lives. And frankly, it made me a little disgusted with the industry and why I wanted to start my own firm in Julius Wealth Advisors to try to change the way this industry operates. So what I'm talking about here is many times people do not tie their investments to their goals. Well, what are you actually investing for? Again, bringing this back to prioritize and execute. What are your priorities? What are you investing for? Because if you're investing for certain things. You want to buy a house next year. You want to start a family in 10 years. You want to hit financial freedom in 20 years. You want to pass on assets to your kids. Those things have different investments and different goals that are tied to those investments based on planning. And then there's other parts of planning that you'll need to take care of as well within it. You got to wrap planning with your investments to try to understand and make sure that you actually have a plan going forward. Because as Benjamin Franklin said, if you fail to plan, you are planning to fail. So with that, we're going to take a quick break, and then we're going to shift from ways not to lose, and we're going to talk about ways to win as we pass along essential knowledge for your long-term investment success.
Growing up, Jason Blumstein had become accustomed to a life of financial struggle and frustration. His grandfather, Julius, took the time to teach him the difference financial literacy can make. Since then, Jason has Julius to thank for pulling him out of the mud and pushing him to become empowered, educated, and independent. We want Julius Wealth Advisors to do the same for you. At Julius Wealth Advisors, we are committed to continuing the legacy of literacy and learning. Advising to us is much more than simply telling our clients what to do. It's teaching them how to do it. Our emphasis on client education is founded on the fact that we've seen its benefits firsthand. Our lives and our firm are built by the tools wise friends and family members have passed down to us, and our passion is to pass these tools onto you. Please call us at 201-289-9181 or email at info@juliuswealthadvisors.com to take your first step to be empowered to live your best financial life.
All right, welcome back. So now that we learned how to stop beating ourselves and playing defense, let's play some offense. We're going to shift to learning about how to win. And I'm going to share some successful steps that I have taken in my personal life and things that I have learned through the years of 30 years plus of investing that have helped me and I've seen have helped others. So the first step that I think people can take to help them become a successful investor is obtaining knowledge. We talk about that a lot at Julius Wealth Advisors. It's a core value of our firm: integrity, knowledge, passion. You need to obtain knowledge because you see in life, there's things that you know, there's things that you don't know, but there's also things that you don't know that you don't know. And if you don't understand investing, how can you expect to succeed? And let's bring this to Warren Buffett, a famous quote that he uses. He states, "The stock market, like the Lord, helps those who help themselves. But, unlike the Lord, the market does not forgive those who know not what they do." So let's figure out what to do and why it's important to obtain knowledge. The first reason is because a lot of times when I talk with people about investing and why they make certain investments, there's usually no fundamental basis behind their decisions. So they'll tell me about an investment, or what do I think about this, or what do I think about that. The first thing I ask them is, well, what does the company do? I don't know, Jason. I don't know about that. I don't know what they do. Maybe that's a good place to start. Well, who are their competitors? I have no clue. What's their competitive advantage? Why is this a sustainable business model? Beats me. Got it. So maybe now you do know about the business. Awesome. So what does their balance sheet look like? What does their cash flow statement look like? What's that? I have no clue what you're talking about. What's their profitability? What's their returns on invested capital? Stop talking gibberish. You see, when you make an investment, you are literally, in the stock market, you are literally buying another business. So you have to understand the business itself. Okay, great. So then they say, okay, well, I don't need to buy individual businesses. I'm just going to invest in an index fund. That's what all they tell me. Just buy an index fund. Okay, great. Well, there's thousands of them out there. Which one? Which one of the thousands? Who's doing the due diligence? Well, and how much do you put in larger companies? How much do you put in smaller companies? How much do you put in companies that are domiciled outside of the US? There's a concept called home bias. How much do you put in real estate? Do you have market cap weighting? Do you have equal cap weighting? These are things that people typically do not have knowledge of. And I'm going to go into a good study that I've always liked. It's called the 1/n study. So to help solve and get people to invest in their 401ks, they thought it was a good idea to put more options into people's 401ks. They said, okay, the more options we have, the more people will be interested in this. And then through the years, they noticed that people would put in 1/n and essentially divide their investments equally. So for example, if there's 10 different funds, they put 10% in each, 1/10. There's 20, they would put equally over the 20, irregardless of what those individual funds were investing in. Maybe they were all investing in bonds. Maybe they all were investing in US. Maybe they all were investing outside the US. Didn't matter. People did not have the knowledge to know how to properly allocate their 401ks. Step number one, success to tip number one, obtain knowledge. Now let's move on to step number two, good decisions. Obviously, good decisions lead to good results. And what I found, and what's interesting, is that many people think that successful investing, and really in life, to be successful, you have to say yes. And the truth of the matter is that being successful when it comes to investing is more about saying no. Saying no more than you say yes. And the proof is in the pudding if you look at Berkshire Hathaway and Warren Buffett, and they talked about this in their latest annual letter. And I'm going to read a quote from their latest annual letter. Quote, "Our satisfactory results have been the product of about a dozen truly good decisions. That would be about one every 5 years, and a sometimes forgotten advantage that favors long-term investors such as Berkshire." So here we go. We have what is regarded as the best investors of all time in Warren Buffett and Charlie Munger and Berkshire Hathaway, and they make a good decision once every 5 years. Once every 5 years. Yet every day when we read the media or you listen to Wall Street, they try to tell you what you got to do now. What are we buying now? Okay, it went up. I'm selling it. It went down. I'm selling it. Like, why? Like, say no. Investing success is more about saying no than about saying yes. The next successful tip that I have found to become a better investor is patience. Let me repeat that. Patience. They say good things come to those who wait. But unfortunately, in today's world of instant gratification, clicks, likes, all that fun stuff, no one is willing to wait anymore. And let me share with you again a study. There's many different studies that I've read and seen on this, but let me bring up this one study that I've recently come across. It was a study of New York Stock Exchange data by Reuters. And this study has shown that the average holding time of a position of someone buying a stock or buying an investment has shrunk to 5.5 months. And this is down from almost 8 years in the 1950s. Let me say that again. The average holding time of a position has shrunk to 5.5 months, down from 8 years in the 1950s. And I think a root cause of this is a lack of patience. Patience. If you buy something and it was fundamentally backed with knowledge, and we're only supposed to be making decisions once every 5 years, like Berkshire Hathaway, good ones, why are we buying and selling things and holding on to things for only 5.5 months? That's kind of absurd. You're owning a business. What do you think has fundamentally changed in 5.5 months? And a good way to think about patience is that a lot of times people will come up to me and say, "Oh, Jason, what do you think is going to happen in the market this year or this month or this quarter. Some people even ask me tomorrow. And I tell them honestly, I have no clue. I don't know. But let me paint a different picture for you. So you're coming to me, you're talking to me. Many of the people we work with are what I call henwees. We either work with henwees, small business owners, athletes and entertainers. And on average, clients are in their late 30s, early 40s. So let's just say 40. And we're trying to develop a strategy and a plan that's going to last to get them to financial freedom in about 20 years. And then they're going to be in financial freedom for at least another 20 to 25 years. So 1 year of a down market is only about 2% of the journey, just 2%. But wait, many of these clients, they have children. Well, do you want to pass your assets on to your kids? Do you want to pass your assets on to your grandkids? So again, patience, relax, patience. And the final step, the final way to have investment success, in my opinion, is getting help. So let me share a story with you. Many people do not realize this, but Berkshire Hathaway was a defunct textile mill that Warren Buffett rode into bankruptcy. He bought the equity, he bought some debt. The company eventually went into bankruptcy. And he was the largest shareholder. He took over the company. And then he eventually met Charlie Munger. And Charlie Munger said, Warren, we need to change your investment style. You're investing in these what he calls cigarette butt investments. Let's focus on owning the most profitable businesses. Let the most profitable, best businesses bought at a decent price do the work for us. So Warren Buffett got some help from Charlie Munger. So if the world's greatest investor needs help to get a leg up, why shouldn't you get help? So get some help. Everyone needs help in different facets of their life. When it comes to investing, get some help. I need help. I talk to many people about investing. I try to read books. I try to talk to people. I try to get as much help and obtain as much knowledge from other people that have knowledge from me to get some help on investing and other areas of life as well. So let's wrap this segment up and take a quick break. And when we get back, we're going to relate all of this, everything we've talked about so far in the Big Bo Show, to the Miami Heat and their improbable run to the Eastern Conference Finals. Okay, welcome back. So now let's take all of this and let's relate this to, as everybody knows, my biggest passions in life, as I tell people, are food, football, and finance. Well, it's not football season, so I don't really have a lot of football to watch, but I am a big Miami Heat fan. Now, I'm not a huge NBA fan. I'm a big Miami Heat fan. And as you may have heard, if you listen to one of my other episodes, I usually don't get into the NBA until the Heat make the playoffs, or if the Heat make the playoffs, and generally into the second round of the playoffs. And why am I a big Heat fan, and why is everything I've talked about previously on this episode relate to the current Miami Heat run from getting in as an 8 seed, they had to play in the play-in games, to the improbable run of now being in the Eastern Conference Finals. They knocked off the number 1 seed in the Bucks, and then they just knocked off the Knicks. So let's get into this. First of all, the first thing we talked about is you win by not losing. And the first thing you need to do is not get emotional. So if you watch Eric Spoelstra or Pat Riley, the Godfather, they rarely get emotional. Eric Spoelstra, you look at him, he always has this unemotional, laser-focused, killer instinct look on his face. He rarely gets emotional. The next thing is prioritize and execute. The Heat prioritize and execute. In round 1, we double-teamed Adebakembo. I always forget how to pronounce his last name. I apologize. Round 2, we did this Hacker Robinson. They had a player on the team, Robinson, he couldn't shoot free throws. So our priority was, well, hey, if we're down late or we don't want them to score points, let's just foul Robinson and he'll probably miss maybe both, maybe one of his free throws. They also, at the end, looked to say, well, we're probably not going to stop Brunson. So we'll let him eat. We'll let him get what he gets. But we're going to try to shut down everybody else. And we're going to out-hustle them to the ball and out-rebound them. So they prioritized and executed. And they had a plan. The plan, again, this is just me. And I know he's been the MVP. But again, Adebakembo, to me, his plan is always, I'm going to bulldoze you. I'm going to put my head down. And I'm going to run you over. And that's my plan. If I can't bulldoze you and beat you with my power, I'm going to lose. Adebakembo only has one plan. Same thing with Thibodeau, the head coach of the Knicks. They came in with, I don't even know what their plan was, but I didn't see them make any adjustments. I didn't really see any adjustments or any plan when I was watching Thibodeau and the Knicks play the Heat. This is versus Spoelstra, who has a unique plan depending on who they're playing. Again, we talked about it earlier. Round 1, what do they do? Round 2, what do they do? In the middle of the games, you saw them tweak some of their plans to try to win. Do I put this player on the court? Do I put that player on the court? Depending on what's going on. Does Lowry play? Does Caleb Martin play? So the Heat have a plan. So the first thing they did is they're winning by not losing. So then how do they win? Now you're not losing. What do they do to win? The first thing, again, is knowledge. Did you know the Miami Heat have 5 undrafted players on their 10-man roster? 5. That's Hightower, Duncan Robinson, Caleb Martin. Of these 5, 2 of them are actually starters in Max Strus and Gabe Vincent. The Heat go deep in knowledge and scouting and understanding who players are. To get 5 undrafted players on their 10-man roster. 5? That's half of 10, 50%. That's insane in my opinion. They make good decisions. Watch the Heat play. They have ball movement. They are unselfish. Someone has a good shot of a 3. Well, maybe the guy they're going to pass the ball that's open has a better percentage of making threes. Jimmy Butler, he's an okay three-point shooter. Sometimes he passes it to Duncan Robinson because Duncan Robinson's a better three-point shooter. Okay, well, Duncan Robinson, maybe I'm not wide open and I see Adebayo in the paint. I'm going to pass the ball to him. Ball movement, making good decisions with the ball, taking charges. Kevin Love taking charges, making good decisions. The next is patience, and the person I see on this is Jimmy Butler. They call him Playoff Jimmy. So you typically see Playoff Jimmy Butler, having patience throughout the game, seeing and feeling out the game, seeing what the team's strengths, weaknesses are, what his players on his team, their strengths, who's hot, who's not. And then when he needs to, he'll turn it on in the fourth quarter and dominate a game. If the Heat and his team need that, he has patience. And the final is getting help. And the best part of this is that the Heat are a team. The Miami Heat are a team. You call them the Miami Heat. You think of the Lakers. You think of only LeBron and AD. You think of the Nuggets. Only person I can name is the Joker, Djokovic. The Heat are a team. You call them the Miami Heat. They get help from one another. So let's wrap this up. In this episode, we talked about some essential knowledge for long-term investment success. We talked about winning by not losing, bad behavior, a lack of time, not having a plan. And when you first start to win by not losing, then you can actually focus on winning. Knowledge, good decisions, patience, getting help. I hope you liked the show. We then related it to the Miami Heat. Watch the Heat tonight. Hopefully we make it to the NBA Finals. Maybe there'll be a rematch from the bubble a couple years ago. Heat Lakers. Whatever happens, always remember to live a life of integrity, a life of knowledge, obtaining as much knowledge as you can, and always live a life that you're passionate about. Until next time, all the best.
Thank you for tuning in to the Big Bo Show.
Let's take a little flower and turn it into a tree. 'Cause we're harnessing the power that has been passed down centuries. Life in a game, fortune and fame. You're gonna win over time, you know. It's hard to attain, but you're on your way. You're listening to the Big Bo Show. Brought to you by Julius Wealth Advisors.